What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is May 31st of 2023. Well, folks, I hope you are having a fantastic day wherever you are, because in today's video, we've got to spend some time to talk about what may be one of the biggest macro events for Bitcoin over the next coming year, and that is no other than the Bitcoin halving event. Now, for those of you who may not know what the Bitcoin halving event is, I'm going to spend some time to explain briefly what it is and why it's relevant for Bitcoin, but also taking the counter argument here, we need to understand a fundamental flaw or misconception that a lot of people have when it comes to the Bitcoin halving event and its relevancy, or in this case, the lack thereof, as time progresses in determining Bitcoin's price. Many people see this as a saving grace, and many are turning towards it now as the de-dollarization and Bitcoin bank run narratives have started to really fall under the weight of their own arguments. We've got a lot to dive into in today's video. This is one you're going to want to stick around for, so if you guys happen to enjoy my rambling, consider dropping a like. It's one of the greatest ways you guys can support the channel. All right, let's go ahead and kick things off. So let's go ahead and first try to understand, instead of just doing normal Bitcoin technical analysis, I want to go ahead and start off by diving straight into this topic. What is the Bitcoin halving event? The Bitcoin halving event is an event that is pre-programmed into Bitcoin's network every 4 years, where the block reward, or the newly minted Bitcoin that get created every 10 minutes when a new block is confirmed and validated on the Bitcoin network, there is a release of new Bitcoin. Now, this number over time, every 4 years, gets cut in half, essentially reducing the inflation rate of new Bitcoin being created. Now, just to clarify for those who may want to know why, this Bitcoin is created to incentivize miners to invest heavily in computational resources like ASIC miners that are utilized to confirm transactions and offer high degrees of security for the Bitcoin network. That is the general concept. We don't need to go any deeper than that. Essentially understand that this is how new Bitcoin are created into the network, and essentially that as time progresses, every 4 years, we have a new halving event where that inflation rate drops in half. Now, let's go ahead and try to understand the numbers here and try to get a visualization of what kind of impact this can have for Bitcoin's price. So the previous halving event brought us down from 12.5 Bitcoin down towards 6.25 Bitcoin on May 11th, essentially as we reached block 630,000. We're basically seeing Bitcoin exist for about 12 years. We'd gone through a couple halving reward reductions from 25 Bitcoin per 10 minutes to 12.5 to 6.25. And now the next halving event that is going to be taking place on April 26th, 2024, so less than a year from now, is essentially going to take us towards a position where we're only getting 3.125 Bitcoin being minted every 10 minutes. So the concept is relatively simple, and as you probably guessed, in the next 4 years, that is going to drop to 1.5625 or 0.78125 in 2032. So essentially by 2032, over 99% of all Bitcoin will have been mined by that period of time. And we're going to revisit this point later on here because it is important to understand when it comes to halving. But let's go ahead and take a look at the optimistic side. And let's understand fundamentally that the halving event is a positive thing for Bitcoin's price. Some people may agree or disagree with deflationary currencies, or those that are essentially going to have a cap supply. But at the end of the day, this is what makes Bitcoin a very powerful asset. Let's take it one step at a time. The current block reward at the moment is 6.25 BTC per block. That means every 10 minutes, we have 6.25 BTC or Bitcoin being created. If you multiply 6.25 by the 6 10-minute intervals within an hour, and you multiply it by 24 hours that are given in any given day, you're going to get 900 new Bitcoin being minted every single day. That is the current rate of new Bitcoin that are being created every single day. And that inevitably is going to leave more Bitcoin on the market, and therefore, as miners are running all this expensive equipment, paying electricity costs, and essentially trying to run a business at the end of the day, it is going to leave a lot of them having to sell those Bitcoin, or at the end of the day, at least increase in supply. It's never going to be a good thing to have more Bitcoin on the market. There's no way you can cut it there. It is going to increase supply and increase potential sell side pressure. However, when the halving kicks in, rewards per block are cut to just 3.125 Bitcoin per block. And the math is really simple. You take the same amount of Bitcoin, or in this case, the halved amount of Bitcoin every 10 minutes, you multiply it by the same 6 10-minute intervals in an hour, you multiply it by 24 hours, and then you get a new metric. Every 10 minutes, instead of 900 new Bitcoin, we have 450 new Bitcoin. Now, that's a pretty dramatic cut. cutting the issuance of new Bitcoin in half every 4 years is always going to have a pretty major impact here, or at least this is going to have a substantial impact to some degree. Because if we essentially take the 450 new Bitcoin that would essentially be coming to market but are no longer due to the halving event, and we multiply that by the given market price here, just to kind of visualize it, although it will change over time over the course of a year, essentially at current market rates, if Bitcoin were to stay at this rate and we were to have 450 less Bitcoin today, that is going to be roughly $12.15 million less Bitcoin that is being generated on a given day. That's a pretty substantial amount of money here. $12 million is no laughing matter. But to get this really visualized on the grand scheme of things, if we take this to an annualized rate, 450 Bitcoin less each day at $27,000 is going to be roughly $4.43 billion less Bitcoin created each year. Now again, that number will vary depending on where Bitcoin's price is on any of those given days, but just to visualize it at current rates, we're talking about billions of dollars less Bitcoin being created every year. That's a substantial number. It's not something to be totally laughed at, and it is going to have an impact on the supply and demand balance that we are going to have to talk about here. Because this is why every single time at the halving event, people expect that Bitcoin's price is just going to move higher off of the halving event alone. And historically speaking, it has had this kind of effect. It has been one of the kind of initial sparks that kicks off a move to the upside. And some critics have talked about, the halving event being priced in. If it's programmed in, doesn't everyone already just know it's going to happen, and therefore the price we see today for Bitcoin is already representing that? I actually disagree with that point, and in favor of the bull argument here, that's actually a false statement. Because while some of us know about the halving event, while some of us take the time to understand the monetary policy of Bitcoin, at the end of the day, it is not priced in by all investors. Markets are not entirely efficient. There is no real fundamental value for Bitcoin. And the biggest important point to understand is that market price is determined by a current balance of market order flow from buyers or sellers. If today there are going to be more sellers on the market or new Bitcoin being created versus in about a year's time when we have the next halving event, there is completely different dynamics here. There is a difference between the amount of Bitcoin being sold on a given daily basis. And while we need to talk about the important equation, this is where people don't dive into, where the bulls sometimes will lose their perspective. Although we need to understand what kind of bull side pressure or buy side pressure we're going to have, at the end of the day, having less Bitcoin being sold is going to benefit Bitcoin's price to some degree. It is going to help in alleviating potential sell side pressure. So that's the important reason why the halving event cannot be priced in. It can only happen on that day-to-day basis when we finally shift towards the new supply and demand balance. Okay? So this is, again, something that is important to note here. Again, and I think at the end of the day, while this is definitely going to be a significant event, we now need to talk a little bit about the problem of perspective that people have around the halving event. The big misconception or part that people miss when it comes to the halving event and its relevancy for Bitcoin. And remember that big number we talked about earlier, the $4 billion plus that is going to be removed from new issuance every single year for Bitcoin's price. That is going to cut the inflation rate for Bitcoin in half from its current rate. Well, the current market capitalization for Bitcoin is $526 billion. A little over $500 billion in market cap. That number is calculated by taking all the existing Bitcoin and multiplying it by its current market price. Now, in the same way we were talking earlier about how $4 billion, albeit is a very large number, we got to consider the existing weight of existing Bitcoin in the market. And right now, we've got $526 billion of Bitcoin out there that could be sold at any given moment. People could start to unload onto the market, sell for cash towards the other part of the trading pair, right? So that's a very important metric we need to keep in mind. Essentially speaking, the new issuance every year that we're going towards, or that we're removing from the inflation rate, is less than 1% of the existing supply of Bitcoin. So to put this in perspective, we are going to be going from an already relatively low inflation rate since the last halving, which we went from around 3.6% down towards 1.8, which is now kind of dwindled down to 1.7. This is going to be cut towards roughly around 0.8 on the inflation rate, 0.85. So less than a percentage rate of inflation that we're going to be going towards. But we're basically removing less than a percentage of inflation from the overall new issuance or supply. Okay, so think about this here for a moment. All right, where is the flaw that people are missing here? The flaw that people are missing is that the inflation rate effect, when we cut every year, the halving rate comes into effect and we cut the inflation rate. If we take a look back at the halving event here, back in 2013, we can see that we dropped from an inflation rate of 26% down towards around 12% for Bitcoin's inflation rate. Now within that halving reduction, we dropped 50% on the inflation rate, but we dropped roughly 12 points, right? If you go from 24 to 12, right, just kind of roughing it out here, 12 percentage points on the inflation rate for Bitcoin. This halving event is going to be less than 1%. So why is this relevant here, right? Because isn't it the same weight because we're dropping 50% from the previous inflation rate isn't going to have the same impact here? It's actually not true. Because if we go back to that point we talked about earlier about market order flow, it becomes towards the question of not what the inflation rate is going to be for Bitcoin, but whether or not there are more buyers or sellers for Bitcoin. Now, for those of you who watch the channel frequently, you'll constantly hear me talk about something known as cumulative volume delta. It's a more fancy term for what I like to call market order flow. At the end of the day, when people are buying or selling an asset, there are two types of order types they're going to do. They're either going to market buy, which is probably what many of you do. When you go on Coinbase, you go on there and you either buy or sell Bitcoin at the best available price so that you can get access to Bitcoin or sell your Bitcoin into cash and go spend it on something, right? That's the vast majority of traders out there. On the other end of the spectrum, you also have, in this case, bids or asks, what's known as limit orders, people who are looking to buy Bitcoin at a discount price or looking to sell Bitcoin at a higher price from the current market rate. Now, in any given trade, there are always going to be a buyer and a seller. But at the end of the day, we talk about the significance of these market orders or market order flow because it is what is going to dictate the direction of price. And the reason being is simple. If you have more people buying Bitcoin at the best available price than selling, it is going to push price in the direction, even if there are bids and asks on the order book that can provide some degree of support or resistance. At the end of the day, it is where the momentum, the demand is. It is what's going to drive price in any given direction. If there are more buyers, price will go up. And if there are more market order sell pressure than buy side pressure, that is going to drive prices down. Right? In the grand scheme of things, that is what's going to drive prices in the long run. And we can see that we've been having negative cumulative volume delta week by week by week since back around April. And even before then, as an early sign showcasing that the trend was starting to weaken for Bitcoin. But I don't want to focus so much on that. I just want you to understand this concept here that market order flow matters most. And essentially, if we annualize that target, if we go back here towards our drawing, right, we're essentially going to have $4.43 billion of Bitcoin less on the market. To kind of calculate this here, I'll go ahead and bring a calculator so you guys can understand this in Bitcoin terms, right? So if we have 450 Bitcoin less being created each day, we multiply that by 365, that's 164,250 Bitcoin less being created each year. And while that number is significant, it is definitely relevant in trying to determine where Bitcoin's price will probably be a year out from that halving event sometime in 2025, right? Well on beyond a year afterwards. We need to understand that in the grand scheme of Bitcoin's supply, that is a fraction of the current supply. So if in the just normal buying and sell side argument, who's going to be doing more? Are we having more new buyers in the market or sellers? If there is a sell side gap between the buy side demand of over 150,000 Bitcoin or potentially up to 200,000 Bitcoin, you basically wipe away any benefit from the halving event. So if a year out from now, there is going to be a gap between buyers and sellers here when it comes to market order flow, where there are much more sellers here on the market than buyers, it starts to weigh out the effect of the halving event. This is a critical point for you guys to understand here. It is the reason why as we enter into a contractionary environment and we enter into a halving event that is much less relevant in the grand scheme of things versus Bitcoin's prior events in the past, we need to ask ourselves whether or not this can be the silver bullet narrative that really drives Bitcoin through a new bull market that takes us towards hopefully a price target of $100,000 or $200,000, as so many people are hoping for at this point, buying at around $27,000 to $30,000. You gotta ask yourself whether or not we are going to have not only the halving event take place, but also have generally enough momentum here, enough reduction of new supply to lead towards that wave of euphoric buyers that came in time and time again. It's important to keep these questions in mind, guys, because the halving event is losing its relevancy. There is no argument about this at the end of the day. You may believe that it's enough to spark a new bull market, and maybe you guys will stand to disagree with me here. I'm not here to be a perma bear or be too negative. You guys know we've been covering the halving events. For those of you who've watched the channel long enough, I've been here since 2017. I love the crypto industry in many ways. There is a clear use case here for Bitcoin as a digital store of value and as an alternative hedge towards traditional currencies. There, I said it. I like crypto in that regard. But we cannot deny the reality that Bitcoin, like any other asset, is determined by supply and demand. You can love Bitcoin fundamentally, you can really like the fact that it has a cap supply, but at the end of the day, as we grow closer and closer towards the peak cap supply, the question is not about what the inflation rate will be or when the next halving event is going to be. It's a matter of whether or not there are going to be more eager sellers or buyers. Because if the buyers are now outweighing the sellers, price will dwindle down. It is not some program thing that is going to guarantee Bitcoin goes to $1 million. Any people who are telling you that do not fundamentally understand what Bitcoin is, what the halving event is, and it is important that you understand this dynamic so that you do not fall victim to false narratives. We are always going to be focused here, as much as we love crypto, on focusing on the fundamentals of markets. And I've learned this over the past 12 years as I've been trading throughout financial markets, not just crypto, but in equities, commodities, and Forex. You've got to understand that the weight of the economic ramifications of the halving event may not be as impactful as people are telling you. So if you guys enjoyed my rambling here in this topic, I hope that you will not only consider dropping a like, but one other thing that I'd ask you guys to check out, if it's something that interests you, is the Dash Report. The Dash Report is our newsletter here on the channel. I'll leave a link down below in the description where you guys not only get access towards a newsletter where I do this type of analysis every month. We're about to drop the next newsletter here tomorrow. It's a 20-page plus report. And on top of that, you guys will get access to our momentum indicator that you commonly see me using in the video, the red-blue indicator. But on top of that, you'll get access to our alerts group when you know when I'll be making any trades or setups in the market, exclusive market updates, a mid-month webinar, the read along of the newsletter, and you'll also be able to access the Dash Report discussion group where you can join hundreds of members from the DataDash community, the cream of the crop of our community that's continuously discussing, talking about things within the macro sphere, not just in crypto, but in the whole picture, spotting different trading opportunities where you can capitalize and potentially make returns. But that's, again, something that you guys can check out, and you can get a 20% discount if you sign up on an annualized basis. It's only something if you guys want to get more content on top of the content we create here on this YouTube channel for free. But outside of that as well, I wanted to let you guys know one of my friends and colleagues in the crypto space is going to be doing a conference in Portugal in 2023. This is the Blockdown Conference. Some of you may remember I've spoken at a couple of these through the virtual conferences they ran back during the pandemic. They're going to be hosting this on July 10th to July 12th, and it's going to be in Algarve, in Portugal. I hope I did not scuff the pronunciation of that. But essentially, there's going to be a lot of good speakers there. I'll leave a link down below in the description and a discount code where you guys can get a massive discount on tickets to the conference. But that's going to be it for today's video, everyone. Thank you all so much for giving me some time to ramble on here. I hope you took away some valuable information around the halving event. And it's just important to keep a balanced view on these things, guys, because it's so easy to fall victim victim to these narratives, both bullish narratives and bearish narratives as well. It's why I tried to kind of showcase a good balance here of opinions, as we discussed earlier. But anyways, that's it for today's video. I hope you all have a wonderful rest of your week. I'll see you guys on Friday during the next episode. If you liked the video, again, consider dropping a like, and I'll see you all in the next one. Take care, everyone.